we're in, at least here in Tennessee, it's really icy. It's been really bad. But I didn't want to miss the opportunity to give you guys some information that we got. I think it was about a month ago. I went to DC, like Hannah said, with about 30 other industry experts. So there was software people that were there. So Yardi, Emphasis, I forget if I don't mean, oh, MRI. And then there was a couple housing authorities. I think Pittsburgh, Spokane were there. Several audit firms like ourselves, several fee accountants were there also to kind of just talk to HUD about how this is going to get implemented. HUD made it very clear in the beginning of that meeting. This was not a discussion. We weren't debating whether we were going to do interest. We weren't going to debate if we were going to do SF 425s. We were there to talk about how to do it, not if. So HUD is pretty much, and you'll see as we talk about this, stuck with doing these, and we'll talk about that as we go through. But most of this is going to focus on how to do it. So have that mindset in mind as we go through. So first of all, starting, don't shoot the messenger. I'm just here to explain and give guidance. I didn't make any of these rules. I don't always agree with everything that we're doing in here. I'm just telling you, this is what HUD has told us as auditors, fee accountants, software implementation people. Here's how they want it reported. And these are the guidances that they gave us. There's no real loophole out of this. I've had a lot of people ask me that question, like, hey, Chad, how do we get out of paying interest back? Or how do we get out of this operating subsidy issue? You're going to see as we go through this, there's not going to be any way out of it. I know FADA and a couple other ones are thinking about doing lawsuits because there wasn't a time to look at this and discuss these changes. But the problem you'll see as we go through these is it's not changing any rules. These are simply rules that HUD has not been following or implementing on housing authorities. So they didn't change any rules. They just started following new rules. Well, not new rules, old rules, but they just started following. So main takeaways I'm trying to get from here, or main takeaways I had when I walked out of that meeting, it was an all-day meeting. We were there for, I think, 6 or 7 hours. And it's kind of funny. This meeting happens once every year or two. And it started when COVID started. So that's the most funny part about this, that we have these meetings. We always kind of joke about COVID because it was literally whatever day COVID started, March 12th, when they actually started shutting everything down. This meeting, the first one of these series, started like 2 days before that. I remember my wife calling me on the phone, telling me, get on a plane, get home. This is really bad. They're shutting stuff down. You need to get home. And I remember seeing her telling me not to touch anything on the subway on the way home, or don't put my hands down on the airplane. Just get home and take a shower, and we're going to burn your clothes. So if you all remember COVID, that's kind of how everything went with that. So my main takeaway from coming away from this meeting was this is forced upon HUD. HUD is not any happier than you are about doing this, right? So this, for once, you're not up against HUD. What you're up against is the OIG telling HUD they must do this. HUD has no choice. OIG, if you noticed, over the last 8 to 10 years has been battling HUD on cash management and public housing. And I think OIG is finally, over the threshold and starting to win, and HUD is starting to comply. For a long time, HUD has fought it, as you are well aware. They have ignored this and not done some of these things for a long time. Like I said, these are not new rules. These are CFRs, these are federal regulations that have been in place for 10 plus years. And HUD has just basically ignored them. I always thought it was kind of strange that they did. Our firm does a lot of nonprofit government work. And so when we came and started working at HUD, I was always amazed that we could just draw down, whatever amount we wanted from operating subsidy. We got to keep it, and nothing was ever said. It was just had to be spent on public housing, and we got to keep the money. And that is not how any other federal grant works. So I was surprised that HUD could get away with this. Comes to find out, HUD just was ignoring this for the past 10 years. And now they're no longer allowed to ignore it, which means you are no longer allowed to ignore it either. So like I was saying, this is not changes. These are just CFRs that have been around a long time. I quote some of the CFRs in here. If you want, more quotations on the CFRs, I'm happy to give them to you. They're in the PIH notice. I just get bored when people keep writing that same stuff down over and over again. These things are there. I'm trying to summarize them for you and put them in English for you so you can understand them. And so the big thing we're talking about is interest and cost reimbursement. So I hate that the PIH notice put them together. I wish they would have put them in two separate PIH notices that have made a lot clearer. My presentation is going to discuss interest first and that whole area, and then talk about cost reimbursement. They're two separate issues. I have no idea why I put them together. So what does this mean to you on the interest side? And what does this whole thing mean to you? I'm sorry, we're still going over everything. So in a nutshell, subsidy is always spent last. So whatever you have in public housing coming in, vending machine money, laundry money, tenant rent money, that all gets spent first and subsidy gets spent last. And this is not a HUD rule. This is a federal rule. When you have a federal program, all program income must be spent first before you start spending federal dollars. They want the other money spent before theirs. They're there to subsidize, not make the program. They're supposed to fill any gaps that aren't being filled by program income. That $500 limit has to be returned back to Treasury. So we have to send this money back to the Treasury. It doesn't go back to HUD, just like every other federal program. If you have an HHS program, Health and Human Services, when they have extra money left over or they have interest, that does not go back to Health and Human Services. It goes back to Treasury. Treasury puts it back in the pot and it's redivvied back out to all the federal programs. And program income does include tenant rent. And I'll go through a whole list of program income in a minute. And then who does this affect? Because I know I have a lot of MTW clients who are probably on here going, yes, I did MTW, I'm out. No, I'm sorry. MTW is included. If you're drawing money on ELOCs under public housing, you are part of this. And the notice even says MTW is part of this effects, which means if you show more than $500 of interest in public housing, you will need to send that back to HUD. And if we're pulling down money, we're talking about cash management, even though we're under MTW, MTW is fungibility. MTW does not make you earn the money. So just because you pulled it down under your MTW program and put it into your MTW program, unless you expend that money, you are still subject to all these items. So sorry, that's bad news for the MTW people. Usually MTW gets you out a lot, not this one. All right, let's focus in on interest and talk about interest first. This comes from all federal recipients, right? There's a cash management rule. You're supposed to draw money as close as possible to disbursement. Think of capital fund. That's how we always do capital fund. You're very familiar if you have capital fund with the whole 3-day rule. If you draw it down from ELOCs, you need to spend it within 3 days. Obviously, we have not been following that in public housing, right? Public housing, we're drawing the money down 1/12, 1/12, 1/12. Like spend it, don't spend it, doesn't really matter, right? And so they're also talking about making this cost reimbursement. And since it's cost reimbursement, that means federal funds are paid last. Now, they haven't changed your grant. I had someone argue with me that they changed the grant. It wasn't cost reimbursement originally. It's always been cost reimbursement. There's only 2 types of grants, cost reimbursement and fee for service. This is not a fee for service grant. And so it's always been cost reimbursement. You were just always allowed to advance your money in the past. We're going to talk about later on. We think you should be pulling down money down as you spend it, kind of like capital fund. So interest, you're limited to $500 on all federal programs. So that doesn't mean $500 each AMP. That doesn't mean $500 between the AMPs and CFP, HAP. All 3 of those, you get $500 total. And that's all you get to keep. The rest of it has to go back to HUD. Now, I'm going to go out of order. I'm going to go down on this slide because it's important to talk about the non-federal. There's no limit and you don't have to return it. And those include fee-for-service grants like HCV admin. HCV admin is a fee-for-service. You perform a service for HUD, they give you an admin fee. HAP is not. HAP is a cost reimbursement portion of a grant. So HAP grants, when you have, you pull that down, you're supposed to spend it within 3 days, which most housing authorities do. And when you pull that money down, you're not really holding on to it. We don't even pull the money down. HUD sends us the money. Sometimes not on the first, which really messes up our accounting. Cole can attest to that. It's a nightmare when they give you a day early, especially with your fiscal year end. But anyway, HUD gives you the money on the first generally, and you turn around and send it back on the second, third, fifth of the month. You're spending all your HAP money. So you're really not holding HAP. What you're really generally holding is HCV admin. That interest you can hold on to. There's no limit on it. But anything over the $500 up there in the top left will be remitted over here on the right. Is you have to remit it annually, the excess to HHS payment service system. So HHS is the one who's set up to collect all the money for everybody. It does not go to HHS. HHS just collects it and sends it to Treasury. They just didn't want to set up, I don't know how many departments there are in the U.S. Government, but they didn't want, 15, 20 different places collecting money. HHS has been designated it for a long time to collect the monies and forward them on to the Treasury. And you need to do this annually, and you should have been doing it for the last 10 years, so there's no effective date. It's like you were already supposed to be doing it because I asked that dumb question in the meeting. So when are we supposed to start implementing this? And they said already. So HUD is expecting you to go ahead on any, and we're just basically doing anything September 30 and beyond because June 30s have already been issued on most of our housing authorities or very close to issuing. I'm not going to go back and fix them. HUD hasn't done anything to us this far. We will start with the September ones and do those so we don't get into hot water. Now, I'm sure there will be some people out there who may not implement even September or December or March. They might just see how long they can ride this out. Good luck. If we audit you, we won't. We will disagree with you and have you post an adjusting journal entry because I've sat in a meeting with HUD. All the top brass of HUD has said this money needs to come back, and it needs to come back effective immediately because that's what HUD's being told by OIG, of course, again. So you'll have to, if you need help with the HHS payment systems, talk to your fee accountants. We can guide you a little bit, but obviously I cannot help you do that as the auditor. Okay, I'm going to pause there just for a second because that's a lot on interest. Cole, do I have anything I need to? Is there a lot of chatter in there? Do I need to talk to anybody about anything? Does anyone unmute and say something about interest?
Uh, Melinda, do we need to calculate this as of year end of our fiscal year or calendar year? Melinda, it would be your fiscal year end.
I would do
Since
my
you're,
fiscal year end because it
yeah.
just makes it easier, right?
I mean,
We
technically, if you wanted to, if you're posting interest in every month, you could just set up, hey, I've gotten $500 in one month, and then everything else is as you're doing your month end close as a payable. You could do it however you want, but as your auditor, we're going to go and we're going to recalculate how much interest you got, and then we're going to see how much you actually have to have as a payable. So, um,
It's going to be really simple because you just don't want to turn into, and we won't as auditors turn in an FDS that has, $8,000 of interest in public housing revenue. It's a line. They know it. 711. You can't put it in restricted 720. That doesn't help. You can't have more than $500 of interest. So I just did one, I think yesterday, when I was working on their financial statements. We set up $141,000 payable back to HUD. That's how much they earned in 1 year. They're earning like $141,500 in public housing. They're sitting on massive amounts of operating subsidy. Good news is they're not coming to collect that old subsidy. You just can't earn interest on it anymore. Anything else in there, Cole?
is there a specific interest rate to use, or do we use the rate paid by the bank? So it'd be the rate paid by the bank, but according to cash management, your account does need to be in a interest bearing account. So you need to work with your bank if your like stuff is not in an interest bearing account. According to the regulations, you do need to be in an interest bearing account. It doesn't matter what the interest rate is, as long as it's in an interest bearing account. So I would say if you have CDs, don't worry about them anymore. I mean, just put them into an interest-bearing account. Why would you do that, spend the extra time to do CDs when you don't get to keep the benefit, right?
I
Let's
agree
see.
with Cole's statement.
So let's see. Uh, does this include the interest we receive in FSS escrow? I believe
No,
FSS escrow is restricted to that program and you keep it.
no. We
But it
probably
doesn't go to
gonna,
the housing authority, it's restricted to the FSS escrow program.
yeah, it has to make sure it stays in that bank account. So you have to have your FSS escrow in a separate bank account, I would say. So if you're pooling your cash, Um, no, I would say in order to get this interest, and if you want to keep that part of the interest for FSS escrow, you would have to put it in a separate bank account, and that interest would stay with the FSS program, which means then if they forfeit, their forfeitures plus any interest would go over I generally encourage people not to have FSS in for interest bearing only
Yeah, I
because it
think,
causes so many headaches. Because
yeah.
who gets how much, each tenant it's in there. If you have 50 participants in the FSS program, you're trying to figure out who gets what interest is really complicated.
Okay, one second. Let's see. There's an op sub question. We can talk about that later
Yes,
um,
yeah.
during cash management. What about interest we earned on an insurance reimbursement?
I'll talk about that in a minute.
Yeah,
No, it's not program income. Insurance on insurance proceeds are not program income. I just haven't got there yet. Coming up in the slides, so we'll
and then hey,
circle back
Mark.
and see if that answers.
Yeah, is this for fiscal year 25 or retro to fiscal year 24? We, as your auditors, we are not. We're starting at 9/30/25s to post payables. We're not going back. So you we'll see what HUD says, but I mean that's our opinion. So, but like I said, it could be different. It could be like, hey, we need to go back, and that could be an issue. But I don't think they're going to go back.
I don't think
Uh,
HUD's interested in doing that. It's just too much work. I
um,
think what they're looking for is people who are not going to comply, and we're out in the middle of 27 and you still haven't sent
mm,
an interest payment in, and you have interest on your FDS, you're going to face problems.
yeah. Steve, if I can make interest, why wouldn't I continue to maximize this? What is the problem with helping the federal government? I mean, Steve, you can do that if you want. That's perfectly okay, but it doesn't benefit the housing authority. So, um, I, do whatever you want. That's perfectly fine as well. I mean, you're
We're
just
trying to make your
you're,
job easier. You don't have to
yeah, we're
shop
just
as
trying to make
hard.
your job easier, but
But
that's
to
okay.
Steve's point is a good point. You don't want to go put it in a 0.01% interest and try to screw the government. So that's not.
Right.
Please don't take that message back. What we're saying is don't kill yourself to earn interest for the federal government. You might have. I've had clients who literally spend days searching every bank to renew CDs, and all we're saying is, I don't know if I would put that kind of effort into sending the money back to the federal government. I would definitely, there's nothing wrong keeping your money in a CD
Yeah.
and getting 3%, but shopping around and changing banks and doing all that work for a 0.5% now seems like a little too much work.
Okay. We're going to talk about interest earned from disposition proceeds later, I believe.
Yep.
Um, Carla, so to be clear, we can keep $500, and if it is above 501, we would send $1 back. Yep, you technically
That's
owe the $1.
absolutely clear.
That is exactly how it works. Dustin, if we have unfunded pension liability that exceeds our available remaining op sub, can that be factored into what is calculable for interest?
No,
No.
no, just interest earned. You're
Okay,
holding on to
100%.
cash.
Yeah, Patty, 100% rat agencies. Now, this is a good point, Chad. I would say
You stole my
it's
thunder at the very end of this presentation.
yeah, yeah.
Who's getting a nasty gram? Who did that one? Someone's in trouble. Good job.
If you're rad, those are fee for service contracts, so you get to keep the money, but interest based on fee for service. So I mean, if you're 14,195, you have excess cash that you can distribute back to you for free, and that interest is included in that. Uh, but if you're PBV, I mean, you get admin fee, and those entities get to keep all the interest from earning the
Yeah, because that rent
rent.
comes over. It's a fee
Yeah,
for
the HAP.
service rent.
So it's a fee for service grant, and the HAP is that goes over to your rad agencies
Under transaction.
is rent. It's a service contract. So
Yep.
um I have so we just answered Brian's question. For HC Naaria, for HCV, do you calculate the interest earned on the restricted net position balance each month? Um, I would say it depends. I mean, what we're going to do is calculate it probably at the end of the year for as your auditor, but as an entity, you probably need to do that. But also, you're not because how much HUD restricts HAP, you should
Yeah.
not have very large balance in your cash for restricting that position anyways, unless you do, and then they're going to start pulling money back or reducing your HAP to get those balances lower. So it's not going to be a big issue, but it could. I mean, you could earn over $500 in interest, and then you would have to pay it back. But that rule has always been in place.
Yeah.
So, but
They've been doing that a long time.
yeah,
Uh,
and most of our housing authorities, because of how HUD held reserves and stuff, we don't really see them earning interest on that. Um, so Vicky E, so if we are spending local dollars first, my interest earned is local dollars and spent before HUD monies. Why is that not a local revenue? Because you've expended all of your local dollars first, so any money that is earning interest is operating subsidy.
correct.
What do we do when the funds we have in reserves we have been saving program income for a capital project, new siding and windows? Um,
That's
are
going
you?
to cause problems. There's a couple problems that we're going to have going
Yeah,
down the road for small housing authorities. One, someone just brought up that question. We used to kind of save money off to the side, and I'm going to talk about capital fund being transferred in also under operating. You probably don't want to do that anymore into public housing. Um, so I don't have a solution for you how you're going to fix that. That's one of the problems that HUD knows they're facing. The other problem that HUD is facing is the scoring. They have to redo scoring. There is no way that they can tell you A and then score you on B, right? We used to be scored, and we still are currently scored on having so many months of Maynard to get your full points. This would go in the face of doing that. You should have no months of Maynard because we're drawing down funds as we need them. We wouldn't have multiple months of Maynard available to us. So they are going to have to fix scoring, but you know how fast HUD moves. What's most likely going to be you're going to have to appeal in 26 if you get scored lower because you don't have the Maynard because you're doing what you're supposed to do. We have to appeal and get our scores back. And it's just going to be a big headache. But you know how fast HUD moves. I can't make them move any faster. I swear, I wish I could. They should just get rid of that. It should just go away. The Maynard score should just be disappeared off the scoring. But I don't think it's even that easy for them to do. I don't think they can just simply turn that off, even if they wanted to. Go ahead, Cole. Sorry.
that was all. Those are all the questions for the interest as of right now.
Okay.
Um,
Let me
we
keep
can,
going, and if you see
yeah,
something that pops up, Cole, let me know.
yeah, I will.
Okay. All right. So then on to the interest was kind of old. We've kind of been talking about that. That's been floating around for 6 months. What's not been floating around is this SF 425. We may be familiar with if you had COVID funding and you did some of the COVID stuff, you did fill out a 425. If you didn't know that's what you were filling out, that's what you did fill out and send in. So not to bring up bad memories, but it's pretty much the same thing. And it's not going to be any more fun than we did it with COVID. So a little bit of background. SF 425s are always done on the grant funding cycle. And so since you are funded on public housing on a 1231, no matter what your fiscal year in, the SF 425 must be submitted on a 1231 basis, which will cause some problems for people who are like June and half of year, you know, grant will get spent in one year and the other half will get spent in the other year. That's going to make it really a little more challenging than say a 1231 um, housing authority do it. Like I said, the SF 425 is not new. It's way back starting in OMB 2008. I think that's when uniform guidance came out. I'm pretty sure that SF 425 existed before that in different forms. If you go read it, it tells you there was a bunch of different forms before uniform guidance because each little department had their own, and now they consolidated into one standard form, the 425 under uniform guidance. So it didn't start in 2008. That's just when that form was completed, and that's when uniform guidance started. We were doing this probably almost for 20 some odd years, probably longer than I think I've been in the profession. I think we've always done this on nonprofits, just in different formats. It's just simpler now because it's one form for any federal agency. It's like I said, HUD must implement. HUD does not have a choice. HUD has been given a deadline. They've been told you will start with operating subsidy 26. HUD did not pull that out of thin air. HUD did not pick that date. HUD was told that date by OIG. You will start doing this on op sub 26. So we've already started. We're in a month. We've already done a month of op sub 26. So you're already in, I guess, the mud, however you want to say it. And so we're already working in this rule already, which a lot of people were upset at the meeting because we went to the meeting, 15 days before for calendar year end, and this thing started like in 18 days. So software vendors were freaking out about this. I will give you some easy guides on how I think it should be done. And so, I don't have HUD did not tell us how to do this. They would just listen to everyone's ideas, and they're supposed to come back with another meeting That's why we put a recording date on this, because I don't know how long this information will be good for, right? 6 months from now, HUD could change their mind. I don't think they're going to say don't do any of this stuff, but they might change a little tweak here and a little tweak there. Um, you have to fill out an SF 425 for each grant. So that means each amp. So if you have 5 amps, that means 5 SF 425s. Because it's grant based, you have to do it by each one. So if you have an ELOC draw on amp one, ELOC draw on amp two, ELOC draw on 3, 4, 5, you will fill out 5 of these forms. And if you carry over to another year, you'll fill out 10. You'll fill out 5 for the 26 grant you're finishing up, hopefully in 27, and then you'll start filling out the 27 for the 5 amps you have. So this does compound as you go. So we do want to spend first in, first out in the order of expenditures, right? So having said that, what I'm trying to say in plain English is, if at the end of December 26 you have not fully spent your operating subsidy, which most of you probably will not, you do not want to start drawing on operating subsidy 27 before you finish fully spending 26. Think out of CFP years. Get the year spent off and then start the next one, because they do have a time frame of how long you have to spend this money. And so we want to get it done. Now, there was a lot of hubbub in this meeting about how to track the expenses, how to gather this data. I'm telling you, from doing it on the nonprofit side, we have an easy methodology that may not be 1000% right. It's about 99% right, and it gets past all the other federal programs. So I'm going to tell you the same way I would encourage you to do the same methodology that the other government grants are doing, which is they code their revenues and then match up their expenses to their revenues, right? So this one, you want to say, like, you want to bring in your money. We used to just bring in op subs. We didn't have anything. If you look at this coding, we'd have, 101 being the amp one, the account code being 3401, and we didn't have anything after that. We just have 000, and it would just be op sub. And it didn't matter whether it was op sub 26, if it was op sub 27, where we got the money from, didn't matter. I would encourage you to change your chart of accounts effective immediately to start tracking what is 26's money, what is 27's money, which is 28's money, and just keep running totals of those so you can see that you've dropped those down. Kind of think like capital fund. We do that on cap fund, right? We track which cap funds year it's coming from. I would start doing the same thing on my operating subsidy. And I'm going to talk about making your costs match your revenues in a minute. So if your revenues match up with your cost, you don't have to track down to the expense level. I'm telling you, there are some people in that room that were talking about identifying each check that was paid to a vendor, to whoever, and identifying whether they were paying from tenant rent or operating subsidy. And I just shook my head going, you're insane. That is way more work than any federal agency has ever done. As long as you're coding your expense to public housing and saying these salaries belong to public housing, we will show you a methodology to use to say we're spent all of our tenant rents first. We spent all these other program incomes, and then getting to the bottom line of what do we draw for operating subsidy. So since I'm talking about it, let's just get over there so I can kind of explain it in more detail. So some slides. Here's a quick slide on just what's program income, what's not program income. This is all in the PIC notice. Rental income, obviously, is program income. It's derived from the federal asset, public housing. Snacks, beverages, and coin operation machines, those are all because they're on federal premises. They would not be able to generate the money that they generate if they weren't on your premises. So as long as they're in public housing premises, you have to take that money in and consider it program income. And if you lease out, like a cell tower on the top of your public housing building, that lease income is program income and must be spent first also. What's not program income is the operating subsidy, obviously. If you draw cap funds in as operating subsidy, it is not program income. So that's the other one that will still go in there and be sitting there. And an insurance proceeds, someone asked about that too. So if you earn interest on insurance proceeds, then you do not have to pay that back. And if you want to do the headache of trying to transfer in capital fund to operating and identify that that's still sitting in your bank account because you're holding it off to the side, and how much of that is going to be interest that you can earn and keep in public housing, good luck, keep good fun, keep good records. I mean, the pick notice talks about how to do this and do it. I think it's way more work than it's worth. But I know people are going to run into problems where, hey, Chad, my cap fund's going to expire if I just leave it sit over there. I've got to pull it in and I've got to save it because I don't have enough. I think on those instances, give us a call. Let's try to come up with a plan. I just don't want to give general guidance that everyone should pull their cap fund money over and leave it sit in their bank account and then they can earn interest on it. I think that's a bad idea. Special circumstances, come up with some kind of special plan, but it's going to require a lot more accounting, a lot more controls. So I would not encourage people to try that methodology. It's just going to be tough.
Hey Chad, we got
Yeah,
a couple questions.
sure.
Can you give me the CFR referencing where it outlines order of spending? Thank you. I think
Not
it's
off my top of my head. If they want to email me, it's in the pick notice. I can find it for you. It is a CFR. It's on federal regulations. Program income
and
must be spent first.
and they're wanting to know which pick notice is it are you referencing?
Pick notice the one I'm doing, 25-20.
Yep. And then I looked it up real fast. It's CFR 200305 section B and 5. It says basically if available, the recipient or subrecipient must disperse funds available from program income before federal funds, before requesting additional federal funds.
Thank Cole. That's why I love Cole. He can Google this stuff faster than anybody. All right. Any other ones I got to talk to before I go on?
That's it.
Okay. So this is our suggested. This is not from HUD. This is definitely SMCO suggestion. This is not HUD. I threw this at HUD. So did some people threw multiple different ideas of how to do it. I don't know what they're going to come back with. This is how I see all of the nonprofits do their cost reimbursement grants. What they do is they spend all their money, they code all the money to the grant, right? So you're coding all your costs over to public housing. We're not drawing any operating subsidy at the first of the month like we normally do, not drawing 1/12. And if you did January, it's fine. We're not going to put you to the wall on that. It's like if you're still doing it come December, we're probably going to have a problem with cash management. I'll talk about that in a second. But so what most people do is they put all their costs over into public housing, into each AMP, whatever, however you allocate it out. We have tenant rents coming in. We might have some laundry income coming in, and we'll get a net income, right? And we're going to say, okay, well, it's going to be a net loss, right? Because obviously that's the whole reason for public housing is that if you just collected rents of 30% of their income, you could not survive. It's the whole point of public housing is that public housing fills that gap for low-income individuals. So what you would do is figure out month to month, what is that gap? Because it's going to be different each month. So we're going to pull down the money based on what we need on step 2. So let's just say it's January and we didn't pull the 1/12 at the beginning of January. Somehow you had a crystal ball and knew not to do that. So we didn't pull the money in January. We collected, let's say, $1,000 in tenant rents. We spent $10,000 in the AMP1 costs. And I'm doing this very simplistic just so because I'm not good at math. Everyone who knows me knows I'm not that good at math. You would have a $9,000 loss. What you would do February 1, February 2, somewhere in the beginning of February, you go to ELOCs, draw down the $9,000 to make yourself whole again. We would spend all the money in February. We'd see how much tenant rent we had. Maybe this month we're short 8,000. So then we draw down 8, right? We go to the next month and maybe we're short 12. Then we draw 12, right? So month to month, we're drawing what we need to fill the gap. This gets us around cash management because you've already spent the money on drawing the funds. Kind of like CFP. We generally tell you, you're not really supposed to spend public housing money on CFP and then reimburse yourself, but we know 99% of our housing authorities do it, and we just kind of look the other way on that. You're going to have to do the same thing here is you're going to have to, you should, if we're talking about interest, you should have leftover, funds from previous years that HUD's not collecting back on. So we're going to use that as our cushion, and we're going to pull down and spend money that we haven't drawn from HUD yet and come up with a number that we go, okay, HUD, if you want to look, and that would be my support for the draw for ELOCs is my income statement that says, hey, I finished my income statement and I'm $8,000 short. Look, magically, that's what I would drew, $8,000 this month. Now, you can get cutesy and just do 8,000 every month too, but that's going to be a problem if one month we look back in the income statements. And believe me, we're going to do this because they're making us look at cash management. They're putting cash management on the compliance supplement for public housing. That's how concerned they are with this. And if we see that you're drawing funds and you're not spending them within the 3 days of drawing them, then we have to write a cash management issue on compliance. And some of you might say, I had a good friend of mine try to argue, well, if they advanced you the money, then it's spent. And that is definitely, if you look through the CFRs, and I'm maybe Cole can Google it while we're talking, I can't find it for you, but advancing you the funds is not spending it. You can be, you can just go to cap fund. If you pull down cap fund and you don't spend it for 2 months, you get an audit finding from us, and you should be getting an audit finding from everybody, because if you draw the funds down and sit on them, you're not allowed to do that. Public housing is going to be no different. So this is our easiest methodology that we've came up with. And then you want to do a reconciliation at the end on the 425, because there might be something, everyone's going to throw it out just like they did in the meeting. What if a tenant, goes bad debt and we don't collect on that and we counted it as revenue, but it didn't really collect the cash? Yes, that's why you need to go back at year end and probably do a reconciliation on the 425. That is what all my federal programs do. And nonprofit side is, they do their best all month long. And we look at materiality and say, materially, you're complying with this. You're pulling down the funds that you need. You're not just pulling down willy-nilly. And then at the end, you may come up with, I pulled down $1,000 too much, $2,000 too much. You will have a spot to explain that on the 425, saying that, hey, I have some cash I'm sitting on, because I generally don't want you sitting on any cash. You should have, if you drew it, should have spent it. And so if you say, hey, I've got $1,000, $2,000, some of the big programs might have 10. If you're spending $8 million in public housing, you may be sitting on $2,000 or $3,000 that some invoice got canceled, some check got voided. And as long as it's not carrying, what they don't want to see, it's kind of like this interfund. They don't want it carrying. So if you're kind of carrying it on the 26, at the end of the 26 reporting period, you show, I had $2,600 too much that I didn't spend. When you get to the next reporting on 26, you better show that being spent. If you keep carrying that 26, they're going to have the same problem they have with interfunds. Is why are you sitting on the federal government's cash?
There's a question. What about insurance? When that comes due, the op subsidy won't cover it. Well, you can, if you,
Say that again, Cole. Okay, I'm maybe
what
try it
about
again.
when insurance comes due, the op subsidy won't cover it. I think based
Oh,
on
if you're
the
paying your
previous
insurance
year.
all, if you're paying your insurance all up front,
Yeah,
then
pre
I would expense it and then move it to prepaid at the end of the year. Does that make sense? I know that's kind of like, it sounds awful because I'm a CPA supposed to follow GAAP, and I just told you to completely violate GAAP by doing that. But I will tell you, my nonprofits, that's the way they do.
meeting jak mám kota po na.
No, that's what I'm saying. So I would violate GAAP as long as you fix it at fiscal year end and set up the prepaid portion. That's what I would do. I would also not do depreciation until the end of the year, just so I don't mess up my income statement. There's a lot of little tweaks in here that we're gonna have to come up with. And I don't have a foolproof plan. I'm just trying to make it as easy as possible for you to not, I mean, you can go the route that some of those software people were, and you can sit there and code each check and identify whether you're going to pull that from op sub or if you're going to pull that from tenant rents. Obviously, every time you collect, the problem is you don't collect tenant rents at the first of the month and you're done, right? You're collecting tenant rents on the first. Maybe someone comes in and pays on the 8th, someone pays on the 12th. And so tracking that, when I was listening to those people in that room, I was just going, you guys are insane. We are sitting on operating subsidy. I would, from previous years, I would just use that as my buffer. All my nonprofits generally have that. They have almost 1 month buffer sitting in there so they can do this. Otherwise, they run into problems. But
Can
yes,
you
when you
draw
pull down
more
op
than
sub,
one? Sorry,
good.
can you draw more than 1/12 to cover the excess expenses?
I would try. And I would think that if you get rejected, I would send a HUD. I'm following PIC notice 2520. I am drawing what I need. Here is my income statement. I need this much money to cover these expenses. And, I can't say what HUD's going to do because we they go to the training and then I get them doing the complete opposite of what we say. And it's like, they were in the training. Why are they doing complete opposite? But
And then, so one question. So we'll draw based on prior month's expenses. Yeah, from Melinda, that's probably the best best way to do it. And then Dustin's asking, are there any special considerations for small PHAs who draw all CFP to operation? Should I track those funds similar to what you're recommending for OPSUB, draw based on net income deficit?
I didn't quite
Basically,
understand.
basically how small housing authority under 250 units for they draw all of their CFP as operating.
Yeah, that's what I mean. I wouldn't do that. Um, but it is still acceptable because when you 1406 is the one line in public and capital fund that when you draw 1406, it's considered expended. And so if you put it over into um, public housing, um, that money I would say would have to be spent first before you draw more operating subsidy from operating. Just thinking out down the line because you don't want to be sitting on money in your public housing if you don't spend it, right? I guess I don't know how I can make that any clearer. Is that at the end of each year, you really don't want to be sitting on any more cash than you started with in 26. At the beginning of 26, if you had $4 million in cash in public housing, at the end of 26, you don't want to have more money being built up in that cash account because I guarantee you that's one of the things they're going to go look at.
And then
And
another
so
question, if interest is spent, does it still have to be returned?
if the interest is spent, does it have to be returned? So I'm going to guess what the person is saying is like, let's see if I can find a loophole. What if all during 26 I keep the interest and I say that's spent and that is not allowed? It is not allowed to be spent. You have to send back the money. Now, I mean, if you want to do fraud, if you want to do fraud and you want to say, hey, I'm just going to record my expenses and reduce my interest, you're going to debit interest income instead of hitting an expense. That would be the only way you'd get it past HUD, probably not past the auditors because the auditors are going to look at interest because it's a hot topic right now. We're going to look at the detailed GL. And if I see debits and interest, I'm going to be asking, where is that? Because there's two things that people can do to commit fraud on there, put expenses against interest or transfer the interest out to another program. So that would be the other one that would be looking for as auditors. I hope that answers the person's question. No, you can't spend this year's interest on the program.
So do we spend all of our reserves first?
No, you don't ever have to touch. Oh, well, okay. I'm sorry. I misunderstood that question. Yes, each month I would be spending my reserves and reimbursing my reserves. Right. But if you're saying, do I have to spend all my reserves before I ever get to the 26 operating subsidy? No, 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 that's not what I'm saying. So I want to make sure that's clear. I'm saying I would use my reserves, pre 2026 reserves. I would be using those to cover my monthly expenditures and then drawing my subsidy to reimburse my reserves back to what they were.
CFR 24990 says payment of operating subsidy under the formula. HUD shall make monthly payments equal to 1/12 of the PHA's
Yes, I
total.
know. HUD's wrong. That HUD has admitted in that meeting that was incorrectly written. I know exactly where you're going with that with the 1/12th, and everyone's trying to argue that the 1/12th, that's where some people are saying when they HUD draws the 1/12th, it's expended. There's a bunch of different arguments about that. And I can tell you that the OMB people were there saying I don't know why you wrote that, HUD. That is completely wrong. You cannot draw 1/12th of a grant. That's three to 1990, I think, guidance of like how to spend a federal grant. Free my time because I know my old partner used to tell me how easy it was and how this was such a nightmare. You guys you're like 20 years late to the game. 20 years ago, they made them do all this stuff. That's how every federal grant was run 20, 25 years ago was they just advanced 1/12th of the grant and now on those, what they would do is at the end of the year, they would recapture whatever you didn't spend. And you had a 1 year period to spend the funds. So that's how they used to do it in the old days. They still didn't get to hold on to it. But somewhere in the mid 90s is when the Single Audit Act came out. That's when I first started auditing. I knew it was a big deal. It was new when I first started. And that's when they started recapturing money from agencies. So they weren't just going to give them, hey, if your budget was $1 million, you just get $1 million. Well, let's say 1.2 million, don't just get $100,000 every month. You spend whatever you spend, and we'll start over next year. The single audit came back and changed all that.
Melinda's asking, so HUD will no longer require PHAs to have reserves on hands. They want to hold the reserves instead, like
Yes.
HCVP.
Yes.
Yeah, exactly.
Perfect. Yes, just like HCV. So, HCV has your HUD held reserves. You don't get all of your money. HUD is expecting you to do the same thing. Now, HUD does that for you on the HAP side, right? They're looking back at the 2-year tool and figuring out how much money to give you. They're not going to do that for public housing. If you read the very end of the PIC notice, they can do that if, I guess, you do not comply and play nice with them. Their ultimate threat is they can move you to that system where you would have to petition HUD for your money, and HUD would send you your money. You would be locked out of ELOC. So that's just a threat. I don't know how violent that threat is, but it's in the PIC notice if you read it. I keep calling it PIC. I mean PIH. I don't know why I keep calling it PIC, because PIC is your system. I'm sorry. I just realized I said PIC about 100 times. I'm talking about PIH.
And then HUD as an ELOC sent operating subsidy for January through May and 1 week of June. Are we not to pull that money monthly? Only pull what we need? Is that what you're saying? Yeah, that's exactly
Yes.
what we're saying. Even though it's in there, you don't spend it until you use it. And you should have, most housing authorities have a buffer now to transition into this.
And I will
Is there
say, you can see this is where this is all going with interfunds, right? This is why they have such a big headache with interfunds. So these, if you're watching the game and you're seeing the big picture, you can see all this stuff kind of converging into one big cluster for us. It started with interfunds. It's gone down to cash management. It's all the way down to the grant funding, is what we're dealing with now. So on here, that's why the interfunds have been such a hot topic, right? You were supposed to be following cash management for the last 20 years. And HUD gave you, and I'll call it out, and I'll tell you, I switched to doing more HUD work and away from nonprofit work because of this. It's lazy accounting, and it was so much easier for us. It was so much easier for you. It was so much easier for us to audit. You just pulled down 1/12. We looked, you pulled down 1/12. Life was great. That was our revenue testing. But I always had that back of my mind. Wow, I'm not sure how HUD's doing this. I'm not sure how they're getting away with it. But it's like one of those things, if you're getting away with it and no one's telling you you have to do it, and you bring it up in meetings and people tell you you're crazy, being HUD people are telling us, no, we have this 1/12 rule. We're allowed to do this. And I'm like, all right, I'm not going to fight upstream and make it a problem. I was like, this is great. So that's why I have these answers kind of already off the cuff, because my whole life has not been in HUD. It was funny to watch the people who have done nothing but HUD as fee accountants or auditors. It was blowing their mind that this concept that they're going to have to follow, and they just have no frame of reference to try to follow. And I'm trying to give you a frame of reference that has worked for nonprofits for the last 30 years of how they've done it, and multiple agencies, including HUD. There are nonprofits who are receiving HUD grants, not public housing, but other HUD grants that do this exact process and turn it into HUD, just a different department than public housing. So sooner or later, those two departments are going to start talking to each other and giving each other ideas. So one other thing we're going to have to start testing for is to make sure you're not just drawing that 1/12 down and making sure that you're doing cash management. So it's going to make us the bad guy auditors. I hate being the bad guy auditors. We were the bad guy auditors 2 or 3 years ago with interfunds, and I didn't have a choice because I sat in the room, and I think I've told the story to people, is I was sitting in the room when they talked about interfunds, and I was sitting next to BDO Nick. Everyone knows BDO Nick. And I kind of nudged them and said, rookies, we don't have this problem. Because what we were doing for our housing authorities back then is we would just go in and reallocate your cash, pay off your interfunds for financial reporting purposes, and tell you don't worry about posting anything, and just leave the interfunds in your GL and go forward. As long as you had the cash, no audit finding. We didn't care. And HUD said, whoa, auditors, that's an internal control issue, and you should be writing it up. And well, me and Nick's smiles went away real fast, and I became the bad guy of HUD for like the last 2 years of writing up people on interfunds. Cole got to join in because he's part of the same firm that knows the same information. We didn't want to write up interfunds. We don't like it. It's not our bailiwick, but it is what HUD is instructing us. It's going to be the same thing here on cash management. This is what HUD is instructing us as auditors. It's hard to sit in a room with them when they're following up behind us and doing a clause review and going, why didn't you do this? You were sitting in the room. I was in the room with you when you heard about this. Why did you not follow this rule? And there's a PIH notice out there telling you to specifically do this, auditor, fee accountant, software provider. If you're not keeping up on the PIH notices, that's not HUD's fault. That's your fault. So telling you, it's not going away.
Let's see. How does shortfall funding play into this?
Shortfall on public housing?
Yeah.
I'm not aware of anyone being in shortfall in public housing. I don't know. Maybe message me after to see. I'm not sure. I'm not aware of anyone in public housing shortfall, HCV shortfall for sure. That's like 80% of our HCV clients are in shortfall. And
You can apply for shortfall funding through public housing. They do that annually.
it doesn't say you have control. The reason a lot of people are
Yeah.
in shortfall on HCV is because we don't have control. You can't pull, you know what HAP you need, right? On February 1st, you can't pull down the HAP that you need. They look back at the 2-year tool and tell you what you're getting. Public housing, I don't see how you would be in a shortfall unless you get to the end and you've spent your full grant.
That's
Then
what
you
I
might be in
think.
shortfall.
I think some housing authorities are in that. So I
Yeah.
apply for shortfall funding. So I would still say it's part of the same grant and it would follow the same rules. It's just a different section in ELOCs where it would just be a different grant that you have to track on the 425, I would assume.
Yep.
But I'm sure there'll be more clarification on that.
Yeah, as they put this in place to start
Yeah.
working on it.
425 seems to allow for cash or accrual. Can we use accrual on a monthly basis to calculate the
Yes.
subsidy draw? Yeah.
Yes, if you read the 425 instructions, and they did go over the instructions when we were there, you can do cash basis versus accrual basis. Believe me, that was a hotly debated topic. I just don't know why you would try to convert your data that's already accrual back to cash to do some reporting. I just go, that seems like jumping through hoops for no reason at all. Why would you, if they give you the ability to use accrual, use accrual?
Yeah.
But it's up to you. There's no us telling you. One thing I will say on 425s, and it was specifically said in the meeting, the auditors cannot prepare that. So if you're thinking, great, I'm going to have Chad and Cole take care of this, no, call BDO, MRI, somebody. We can't do the 425 because we have to audit the 425 data. So you will need to work with your fee accountant or in-house individuals. We can give you guidance. I'm not saying don't call us and ask us questions. I'm more than happy to answer
Right.
questions. We just can't do your 425s for you. Let me get to this last slide, I think, and then we'll go through any last questions. Period of performance now. Public housing is now on a period of performance. It's always been there, but nobody ever paid attention to it and had never enforced it. So you have 7 years to spend your operating subsidy. So the example they gave in the PIH notice was if you're awarded 2024 money, you have till 2030 to spend it. I mean, if you're going to drag it all the way out to 2030, you're going to be filling out SF 425s for 7 years on that grant over and over and over again. God bless you. And at 2030, if you show any money left over, HUD will then recapture it. And you will not win a lawsuit on that one because that is the federal regulation. So you have a period of performance and they can recapture. They lost because they did not follow this particular rule last time when we sued them and took the recapture money back because they didn't give you any notice and they just recaptured all excess funds, even though they had no proof that these are from 7-year-old grants. But they're covering their backside this time. So they're following the 7-year rule. So if you don't spend it, they will require recapture. Basically, since you haven't drawn it, they wouldn't have to recapture it. If you did draw it, then I guess they would come after the cash again, like they've done in the past. They'll recapture that in the 8th period. You have a whole full 7 to spend it. If you on the 7th SFC, SF 425, you show money left over, they will recapture in the 8th period. All right, last questions.
Well, I'm sure there'll be some. We kind of kept current.
Okay, so we're all kind of caught up. Anything else you want to throw in there, Cole?
I
That I might have
mean,
missed.
like I said, we're just the messengers. We're not the people who design this. So
And I guess we're in the same boat as you guys. We're
yeah,
doing our best to try to navigate this with this, the great guidance we get from HUD. Sometimes it's not very clear. And every circumstance is different, so it will not fit every housing authority. It should fit 95% of you. There's going to be the 5% outliers who have weird things where you don't have reserves or you have to draw down your 1406. I would say talk to your fee accountants, talk to your auditors, make sure they know what they're looking at on the, this PIH notice 2520 in consideration when we're discussing that. But fun stuff. Sorry, guys.
Tom, how can we access the recording? I'm sure Hannah will send out a link to the
Yeah.
recording, right?
I'll send out a link to the recording, but it'll be available on our Smith Marion YouTube channel, which I will post below. Also, if you could please fill out the short survey, it really helps us just have an idea of what's helpful to you guys and what types of content you're looking to receive.
Hermelinda is asking, HUD requires a 4-month reserve, so will this be calculated if we can't fully draw the funds? That's what we were talking about before, Hermelinda, with the MNR. They're gonna have to change how they require these things if they're going to this different method. We're gonna have to wait and see on that. The scores will still be calculated in the FDS system, so you'll probably have to just go in and then ask for an adjustment to your score after the fact.
Yeah. Yeah, you have to challenge it with HUD. It's going to be
Yeah.
a headache, and you're just going to have to look and see. What I would say is see if it makes a difference, right? If you're a high performer with not getting your full points and you just really want the points, I go, that's. I mean, if you want to go through it, go through it. But if you go and say, well, I dropped off high performance because I need one more point to make high performer, and they
Yes.
took away 5 for this, then yeah, I would say let's go challenge it and get our points back. So it may still not affect you. I have some people who just perform so high that the main R score is not going to hurt them. They're going to be ticked off they don't get the perfect score, but you can always go back.
Uh, for Steve, for interest income, can we move the payable to COCC and off LIPH books, effectively eliminating interest on interest?
I'm not following what they're saying. Do you
I
understand that,
think
Cole?
no, the payable needs to be on public housing. I mean, nothing says you have to do it annually. You can go ahead and reimburse monthly if you don't want. I mean, I see what you're saying. You're saying I have $7,000 of interest in the bank that I'm having to pay more interest on. I
Uh,
think that's kind of de minimis over the span of the year, but I mean, nothing says you have to do it at annual basis. You could send it back every month after you kept your $500. If you're worried about that, that's up to
right.
you.
Yeah, the actual rule is it has to be done annually, but anything sooner is fine. That's just the
Yep.
minimum. You can't hold it for 2, 3 years and then pay them. So you have to do it at least once a year. If you do it monthly, you can do it monthly.
So what is a date to start interest calculation? If PHA had a 630 year end, do we start as of 7/1 to compute amount to remit? Yes,
Yep.
7/1. Has ELOX increased the amount you can draw down on a monthly basis? I don't believe so. I mean, you'll have to
Might have
work
to talk to
with,
your field offices about
yeah.
this too. I mean, like someone was saying, if I need to draw down more than 1/12, what am I going to do? You got to talk to your field office and tell them I'm using this,
I have this operating company.
PIH notice.
I have this large insurance payment I have to make. I need to draw more. I have been following uh cash management all through the year, but this month I have a very large expenditure that I have to make. So I need the ability to draw more money down.
Yeah.
That's something that the field
And
office
again,
will have to.
if they're blocking you and you're not able to do it, just document it, right? I mean, for your auditors and stuff like that, it's like do your best to implement this, but I can see there's going to probably be roadblocks from HUD just because I'm sure all the field offices are not up to date on this. They do not spread information as quickly as our side does, right? The auditors, fee accountants. I mean, everybody that was in that room was probably had a webinar before I did. I was kind of slow on getting our webinar out. I'm sure there were some that were doing it before December 31st. But as far as training the field offices, that's going to take years and probably us training the field office and not even HUD training the field office. I'm sorry to say, but that's my experience with working with HUD over the last 20 years.
I think that was the last question. Does anybody have any more? If I missed one, don't want to make sure.
Yeah, if Cole missed one, throw it back up in the chat again. We'll hang out for a second or two here. If anything pops in your head afterwards, obviously call
Yep.
me or Cole to ask us any questions about those. Please don't call Hannah. She will tell you I have no clue what you guys are talking about. I listened, but I don't know what you're talking about. Hannah is our consultant on the management side. She is not a CPA.
And don't call me now. I mean, we're still in the meeting. I'm just kidding.
Cole's phone starts ringing. Yeah. And so if we have order of expenditures, order of call Cole first, and then call Hannah, then me.
No.
Joking. I'm joking. Anyway,
Fine.
I hope this was informative for everybody. Again, if you have questions, feel free to ask us. I think Hannah's going to keep that up on our YouTube page for about 6 months, and then we'll pull it down because we just don't want this. It's going to get outdated real fast, just like COVID. Presentations we've done are gone and taken off because funding is no longer around. We don't want that up there any longer. Anything else, Hannah, in closing?
No, not that I can think of. Just a reminder to complete the survey, and also I appreciate everybody being engaged, asking lots of questions. We always have the best webinars and training events when people participate and ask questions. So I really appreciate everybody joining on today. Okay.
All right, with that, thanks everybody.
Have a good day, everybody. Bye.